High prices, weak sales, recipe for disaster? Now wait 1 second. When you read these headlines about home prices hitting new records, they're almost always written like an arbinger of bad times, like the economy must be overheating because of housing. So is this industry the enemy when it's good?
I just want to start generically, because is this different, this kind of acceleration that we're witnessing, than what we saw in the buildup to the financial collapse of 2008? Should we be worried, and are you?
Yeah, I've been saying I think one should be a little worried. This it looks like 2003 again. You can see it in this chart. It kept going up. This is not a market that collapses overnight. It's less short-run volatile than the stock market.
Are we in a housing bubble? What is going on with the 2021 real estate market? If you have tried to buy or sell real estate in the last 12 to 16 months, you will know that as a buyer, it's been ridiculous. It's been a stressful roller coaster ride, having to compete in multiple offer situations. And even when your offer is above asking price, you're still getting denied. And for sellers, you've been sitting on this royal flush hand, and some of you guys have cashed out and some of you haven't. Not sure if you want to throw in the chips yet or not, or hold on to it. What do you do? Where do you go from here? Where is our real estate market going? Well, it's important to look at the facts, shall we? So many of us are led to believe that this 2021 real estate market started because of the pandemic back in March of 2020. The pandemic definitely fueled the fire. It did not start the fire. And that's the key point that I want to get at here today. This real estate market has been slowly on the inclining in the direction where it is at today since 2008. Do you remember what happened in 2008? When this country's housing market had its crash, had the biggest decline in home prices, ever. Home prices dropped anywhere from 15 to 35% in a year. People were losing their homes. People were losing their savings, everything. And not only were our houses affected, our 401ks. You remember what happened there? Yeah, those took a hit too. Well, what happened was, not only did you and I lose money in our housings and our 401ks, but so did the big people. So did those 1%, and they weren't happy with that. So what happened was this. There's something called mortgage-backed securities. Now, mortgage-backed securities have been around for a long time. They've been around since the 1960s, I believe. And what they are is when you and I, or people, go to lenders to receive a mortgage. The mortgage, once it's completed, you've signed all your paperwork, you've closed on your house, it sits in their portfolio. And what the banks want to do is they want to liquidate that, because once they liquidate that, they can lend out more money. So they bundle these mortgages up, and then they sell them off to investors. But in 2009, the federal government was given the okay to buy mortgage-backed securities for the first time ever. Okay, and the hopes for this was to stop the increase in interest rates and stop the dropping of the real estate market and the stock market. Because what's important to understand is interest rates are inversed with the bond markets. And when these mortgage-backed securities, they get sold on the bond market. So when one goes up, the other goes down. So if they're buying them, that means the interest rates will come down. I don't know if you've noticed that interest rates have not gone over 5% since 2008. If you ever look back at our history and check out to see what the 1980s, the 1970s were paying for interest rates on mortgages, they weren't even close to 5%. And that is because the federal government was not able to buy the mortgage-backed securities. Only investors were. So what am I getting at here? So since in 2008, the federal government allowed our feds that control the U.S. economy to start to buy mortgage-backed securities, and they put a limit on it. They were allowed to buy between March of 2009 to March of 2010, I believe it was $1.25 trillion worth of mortgage-backed securities. And they did so, and it did definitely help the U.S. economy and the housing market. We did see the bottom of the housing market kind of stop, the bleeding stop, and start to slowly turn back up. Now, this is the key point here. They were supposed to stop purchasing mortgage-backed securities at that point. But guess what? They didn't stop. No, they still every now and then bought a little here, bought a little here, but nobody was going to say anything because the economy was slowly going back up. The stock market was slowly going back up. People were making money. People were happy. So hey, why let it out of the bag? Everybody's happy. But what this does is this causes prices to continue to go up without the corrections that it needs. Both the stock market and the real estate market need corrections, means they need dips, meaning they need to come down in price. When prices come down, that allows new money to enter into the markets. So think of it like this. If you have already bought your first home, this is how it typically goes. You buy your first starter home. Once that home gets too small, you either grow, your family's growing bigger, or your needs become bigger, you move up to your next stage home. So this home is slightly larger. Maybe you go from a 3-bedroom to a 4-bedroom. Maybe you go from apartment to a single family home, things like this. And then once you go to that, you typically get into a bigger size home, or you start to downsize. Now, if we don't have those people entering into the market, if we don't have those first-time home buyers entering into the market, it kind of doesn't help the whole cycle continue. And instead, it just keeps going up and up and up and up, which has been going on since 2008. And we've kind of dealt with it because as it goes up, interest rates come down a little bit. So it kind of washes itself out, right? Right. Well, this is where we're at today. In March of 2020, when this country was hit with the pandemic, our governments had to step in and do something before everything crashed again. So they allowed the federal government to go back in and purchase mortgage-backed securities. Now again, they were slowly doing this over time, but it wasn't really talked about. But this time they were given the thumbs up to do so. But this time, they were allowed to do so with no limits. Yeah, they could buy as much as they want. There was no limit. However much they felt is needed for the economy to get boosted and get going, they were allowed to do it, and no timeline either. Now, I don't know about you, but when I was a little bit more, free to do whatever I wanted, little responsibility, nobody look over my shoulder, and I had no limits, it didn't always turn out so great the next morning. But anyways, so this is where we're at right now. Our federal government has been purchasing back mortgage-backed securities since March of 2020, so that's about a year and a half by now, with no limits. Now, how much, you ask? You can research this anywhere you want on Google, but let me tell you, it's a hefty number. I have it right here. They have bought $982 billion worth of mortgage-backed securities in this time. This has averaged out to about $40 billion a month. And they really have no plan to stop. They've been told over and over and over again by other Fed members and by other councils that it needs to stop. But they haven't, because you know why? Everybody's happy. The markets are going up. Home prices are going up. It's a great old world out there. Why are we complaining? People are making money. But guess who's making the most money? Guess who owns the most real estate in this country? Guess who owns the most stock in this country? We don't have a portfolio of 10 to 10,000 rentals going on where we really benefit from these home prices skyrocketing, or same with the stock market. So that is what I believe, and many others believe, on why the Feds have yet to taper off on buying these bonds and let interest rates go up. So here on this chart, you can see that home prices have continued to go up since March of 2020. We did have a little dip here, but they have gone up, and interest rates have not changed. As a matter of fact, they have gone down slightly. Now, if home prices are going up and we know people are out there buying, and we know the economy's running again and opening up again and people have jobs again, why are we keeping rates so low? Again, go back to who owns the most real estate and stocks in our country? Anyways, where do we go from here? Where are home prices going from here? Well, look, folks, we don't know. Nobody knows, because this economy, our U.S. economy, is in such limbo right now. It is on the verge to go either way in a pin drop. And I truly believe, after things I've read, that the Federal Reserves will not taper and cut back on buying back these mortgage-backed securities until they're forced to. In the meantime, our home prices will go up, our gas will go up, our groceries will go up, everything will go up. Everything will continue to go up except for wages. Wages will slightly go up, but the inflation between home prices and goods and services prices and people's wages will grow farther and farther apart. What do you do from here is the big question. Well, you can start taking action now. Start to make sure that you put money aside so you can afford the things the luxuries in life that you were able to put on credit before, such as vacations, such as those boots that cost $300 but look really dang nice on you. Those might have to wait. I might have to save a little for those. Start putting money away in savings. Complete a household budget. This is very, very important. Go to everydollar.com. It is a free service and it will help you complete a monthly budget and stay within that budget, because prices on goods and services such as groceries and gas are only going to go up, folks. You really want to see what's going on with gas prices? Check out what's happening in Europe right now. What else can you do if you're looking to buy a new home? There's 3 things I tell all my buyers. Make sure you have money for a down payment. None of this $2,000 business anymore. Make sure you have a significant amount for a down payment. Make it hurt a little bit. Make it be more than $5,000, folks. Don't do this petty littleness. Put as much down as you can. You're only going to thank me later for it. 2, make sure you have life insurance. Make sure your family is covered in the event that something awful was to happen to you. Over this last 16 months, I think we've got our eyes opened a little bit that nothing's guaranteed in life. And 3, that you have a plan to buy. Make sure the place that you're buying, is it in a location where you can see yourself living for the next 5 years? Is it in a location where you like the neighborhood, that you like the parks, you like the surroundings, everything around it? There's no big infrastructure going up near it. Do your due diligence on yourself. That's what should be in your plan. And if you're a seller, what should you do from here? Well, again, we don't know what's going to happen until it is forced to happen. And when it is forced to happen, it's not going to be pretty. Am I saying the real estate market's going to crash? I do not think so. I think we are so inflated right now that prices cannot come down. They will sit. What I believe is they're going to sit in limbo. So again, if you're purchasing a home, be prepared for that equity not to be there until about year 5, 7, or 10. So if you're selling, do what's best for you and your situation. Again, have that plan in place. Where are you going to go? Are you going to be happy where you're going to go? What are you going to do with your money, with the money that you've made from your house? Is it going to go towards something that you can continue to grow off of, or are you going to retire and enjoy your life? Either is good for you, but make sure you have a plan. I hope this helps. My intention for this is to share kind of what I see, what's going on in the market as somebody that's in the market on a daily basis, trading those stocks and bonds, and stay healthy. Bye for now.